Hi, good morning. My name is Kaysian Gordon of Casey Gordon Financial Planning. And this morning, I want to just touch on the topic of cryptocurrency. Now, it's been in the news a lot in the last couple of weeks about the downfall or the potential downfall of FTX, and where people have literally lost billions. I saw actually in one of the financial advisors group chat that I'm in, where one advisor went from in the days before discussing how to move $8 million out to the client's value going to zero. And that's really, really a difficult, and I can't even imagine the situation that the client would be in, and the devastation that they may feel to be able to have sustain such an incredible loss of their assets. So today, I want to just touch base on crypto. A couple of weeks ago, I read an article. It was a survey that was done and published about investors and potentially newer investors. And one of the not so surprising statistic that I read is that a lot of, especially I'd say minorities, their first foray into investing is in the crypto space. Now, if you are a first-time investor or newer to investing, and crypto is the only exposure that you've had in terms of investing, of course, it will not be a good experience for you. But I've been in the industry for many, many years, and I started seeing crypto and paying attention to crypto long before that. And one of the things that I learned from the team that I was working with, and especially my former bosses, if I don't understand something, I'm not going to get involved. And I'm still yet to wrap my head around how crypto actually works. It's not something that's very regulated or not regulated enough for it to be considered an investment. And if that's the only place you have monies, that's probably not a wise decision. One of the things I always caution when you're starting to invest is to invest in multiple buckets, right? So is it stocks or bonds? Don't buy one stock. While that has the potential to grow really, really quickly, it also has the potential to lose money really, really quickly. So I usually guide, and again, this is not a recommendation by any means, to start looking into diversified portfolios. How can you buy one, or it looks like one thing, however, it's a basket of things, but when you look under the hood, that it's way more diversified. So one of the examples that I always use is the S&P 500 ETF. If you were to buy that, while it may look like one holding in your account, you're really holding on to 500 different stocks. So that's a way to be invested and to have a diversified portfolio underneath the hood. So you're now not limited to what one company will do at any given moment. And back to the cryptocurrency and the volatility. The volatility simply means the movements, the highs, the lows, the in-between. Almost like if you were to look at a chart of it, it would be almost like a roller coaster ride that you would have been in. Now, as you are thinking of investing, is this something that you would be able to tolerate when it goes all the way up and then it goes all the way down, and then it has such an uneven ride as you're experiencing it? Are you going to be able to withstand while it goes up and down and sideways and everything in between? That's always something that you want to factor in as you're starting to think of investments and long-term investments. Is it a get in quick and get out? Do you know how to time the markets? I don't know if any professional has figured out how to do that successfully yet. And so if you are considering investments and considering what types of investments, look at how much risk is inherent in that portfolio or in that particular investment. And I'm sharing this, it's not something that I talk about a lot, but I'm really hoping that it will help someone as they start their process of investing, or as they get familiar with investing and some of the things that they need to look for to make wise decisions as to how to have monies grow for them over the long term. Investing is not about getting rich quick. Investing is for the slow and steady, and being able to withstand when markets go down, because you have a process and a thought process in place that will allow you to ultimately get to your goal over the long term. So again, I can't emphasize enough. Take a look at what your strategy is. Where are you getting your news from? It should not be social media. That was one of the other things that the survey said. Most people who are getting invested in crypto are getting their news from social media. That ought not to be the case. Go to reputable websites and sources that will be able to guide you properly, even if you're not a bigger investor, and even if you just want to start getting your feet wet. Don't go for the thing that's just in the news all the time, right? Look for the thing that is going to be slow and steady growth over time. And I know that in the long run, you will be much better off than taking risks that you don't quite understand. I hope this will be helpful to someone. Again, it's not something I normally talk about a lot, but I felt inclined that it should be addressed. Again, my name is Kaysian Gordon of Kaysian Gordon Financial Planning, and I look forward to sharing with you the next topic. Have a great week.